Hello, everybody. So today, isn't it ironic? I get to talk about StoneCo, STNE, one of my favorite stocks, thanks to or because of Warren Buffett. Warren Buffett sold StoneCo, and he sold everything. So he's not in StoneCo anymore, and I find that interesting because I was always surprised that both Cathie Wood and Warren Buffett were invested in StoneCo. StoneCo is a stock of the future. StoneCo is a stock about payment terminals in Brazil. It's disrupting the legacy banks in Brazil. It was always very surprising to me that Warren Buffett was owning StoneCo. I guess he was seeing some value in StoneCo. Well, no, not at all. And it's an ironic day for Warren Buffett because obviously, I mean, we'll see where StoneCo is headed in the future. I'm not saying that StoneCo will be more valuable, but it's interesting that if you follow the news, him and Charlie Munger, they used to call Bitcoin rat poison, and today, if you follow the Twitter sphere on Bitcoin, you know that today Bitcoin became more valuable than Berkshire Hathaway, which I find very interesting. That Bitcoin today became much more valuable than his entire company, and he was calling it rat poison a few years ago. So always take imitation investing with a grain of salt. Warren Buffett was the leading investor in the 20th century. Extremely knowledgeable about moats. Moats were very powerful and very strong when information was not flat, when information was not available at the tip of a button. Moats were the way to invest. Buffett is the one who popularized the concept of moat. But I fundamentally believe this concept is a 20th century concept and not a 21st century concept. And this is why he likely sold StoneCo, because he likely sees no moat in StoneCo, except a company like StoneCo StoneCo relies on other things than moats, such as inertia, such as network effects, which some could consider a moat. And I'm very happy to still own StoneCo. So, in case you're surprised, before I tell you, I was looking at how many shares. So he had about 10 million shares of StoneCo, so that would be 172 million at today's range. But it's worth knowing that, to the best of my ability, to the best of what I can find, Buffett entered the stock in the range of 24 to 32, which was the price of this stock at IPO. So this would be a loss, as far as I can tell, for the Oracle of Omaha. Sad about that. I don't like to see anybody lose money. Let me answer the question. Am I selling too? Well, as you guessed, I'm obviously not selling StoneCo. I'm not selling. This is my fun way of charting the stock. So of course, this is a Google screenshot. This is since IPO. This is what the stock has done since its IPO. You can see it was trading much more expensively in the first 3 years, and then for the past 2 years, they had that collateral issue. You remember I covered it in the video. They had an issue with their collateral. They lost about $500 million, and ever since, the market entirely dismissed them. Yet, look what's funny. The stock in 2019, 2020, 2021 was trading on hope, but I wouldn't have liked that stock then because the revenue growth was nothing. There was little to no revenue growth at all in 2020, 2021 until late 2022, and then the stock crashed. And as soon as the stock crashed, this stock has experienced a crazy great rise in trailing 12-month revenue. More than a doubling, almost a 2.5 times in revenue over the past 2+ years, 2.5-ish years. Yet the stock has been flat. I mean, I know if you started buying this stock in the $8 or $9 range, you may be like, well, wait a minute, I'm up 80%. The stock's not flat. But if you average it out, if you average the average price, we're barely 30% above what the stock was trading roughly in 22 and in 23. So to me, this is one of my favorite cheap stocks. I sleep very well at night knowing how cheap this stock is, but it's also a stock that's more psychologically easy to buy because it doesn't run as much, right? So it feels good. You're not feeling like you're paying 3 times as much what you were paying the stock a year ago. I'm looking at Palantir, I'm looking at Nvidia, these companies that have run so much. This one hasn't run so much compared to many of the hypergrowths that I cover on the channel. Where will Stone go in 5 years? I've covered this in prior videos if you follow me for StoneCo, so this won't be new. But let me cover it again if you just clicked on this video because of Warren Buffett. right? This is their business today, mostly small businesses. And tomorrow in 2027, their investor day, of late 2023, in their investor day, this is where they see their business. They see their business do exactly a threefold from here. They've acquired a software company. If you know that 2 years ago, Lynx, the software company, they've barely started promoting it. So you're going to have a software segment. This is a company that's the Square of Brazil, that's trying to be the QuickBooks of Brazil for small business too. That's going to be a quick segment. And they're very prudently getting back into credit. If you were following this company 3 to 4 years ago, credit was the big thing. They removed credit entirely. They exited the space entirely because of their collateral issue. They've been working on a solution, and now they're launching back credit. And of course, credit is a wonderful thing for revenue growth because you can lend money and earn interest on that money that you're lending for as much qualified demand as there is. As long as you have confidence in the people repaying back, everybody wants to borrow money at a good rate. It's very easy to grow a loan portfolio. When the rate is good enough, there are 3 million entrepreneurs that they have, 3 million small businesses. If they get a good loan, they're going to borrow money for StoneCo, and that's going to help revenue growth. They just need to nail the collateral this time. They just need to be great with collateral. And my guess is that given the turmoil that there's been in this company since they've had that issue back in late 2021, ever since that turmoil, my guess is that they'll get it right this time. But of course, that's a risk, right? That's why we're not in CDs. We're not earning 5% in CDs. We're buying the stock. We're taking some risk. But in the case of StoneCo, the risk, in my view, is fairly limited. This is a company that's trading at 3 times gross profit. This is the cheapest stock, the second cheapest actually, but it's almost as cheap as HIMS. It's about 50% more expensive than HIMS. And the stock hasn't moved. And if you see enterprise value over gross profit over revenue growth, which is my spin on the PEG ratio, I typically consider this anything under a 0.5, I consider pretty good for a stock. This is a 0.069. I mean, give me a break. This is a very, very, very inexpensive stock, predicted to grow at 45%. Enterprise value over trailing 12 months sales is 2.33x for a business who's essentially just gross margin at 74% gross margin, a recurring business. This is a payments business. This is a business where you make money from a take rate based on the velocity of the money. And of course, in Brazil, with interest rates being down and interest rates dropping ever more, and also Brazil being a high growth nation, being an emerging market with people, with the economy, with people spending more and more into the economy, the velocity is going to grow. And the more the money changes hands, the more they use these payment terminals. And every time someone uses a payment terminal, boom, StoneCo makes its 3-ish% in fees, which is amazing. So the stock also, if you're into, it's not my cup of tea, but if you're into earnings, this stock is trading at 24 times earnings for a company that's growing revenue at 45%. In my view, they're cheap. And if you're into long-term guidance, and you know me, I am very much into long-term guidance. This is a stock that has given us long-term guidance. And based on that long-term guidance that you see right here, right, their long-term guidance, they gave us for a net income, so I don't like that. I'd rather see revenue long-term guidance, but they gave us a net income long-term guidance of 4.3 billion reais. So 4.3 billion reais, that's 880 million USD. You apply a 24x, you're getting at a market cap of $21 billion by year-end 2027, compared to the current market cap of $4-ish billion. That's, well, $5-ish billion, the current market cap. So if you do the math, you're almost at a 4x. You're almost at 4x potential in 5 years, assuming that price to earnings ratio remains the same. I would argue if the company still grows at this pace, that the P ratio shouldn't be this cheap for a company that's predicted to grow at 45% next 12 months. That's just my view. In my view, this is a cheap stock. That return based on their guidance and assuming the ratio stays the same, assuming the price to earnings ratio stays the same, that'd be a 32% CAGR, so above 30%. If you follow this channel, 30% a year is my goal. And this is not including at all the $206 million buyback that they approved. So this is a company that has been buying back its stock. And this is a company that also has had cheap financing to restart the credits. And keep in mind, mind, we may owe a thank you to Warren Buffett, because some of the reason why this stock hasn't run up as many other hyper-growth small caps that I cover on the channel, this, HIMS, for example, HIMS has run up much more. A reason why this stock hasn't run up as much, maybe because he had been selling his 10 million shares all along. That may be the reason why. So thank you, Warren, for selling your shares. I am happy to buy a teeny micro portion of your shares. And I know some of my viewers like that stock too. So this was not investment advice. This is just entertainment. I hope you were entertained. I appreciate your likes. I appreciate your subscribes. Thank you so much for watching and have a wonderful, wonderful day.